use case of insurance in this space and DeFi is another good use case in the future. If you want to learn about it, it's a good time to do that because not many people are doing it. So let's see, this is the news about DeFi. Soon even degens could, so are DeFi degens in good hands? Insurance companies want to help. Soon even degens could be covered by a DeFi insurance policy that helps make them whole if they get wrecked. So wrecked is a famous terminology when people lose all of their belongings in the DeFi space. That's when they are wrecked. So distressed crypto markets might finally give DeFi insurance a chance to flourish, but only if it can overcome some headwinds. At the moment, less than 1% of all the assets in $47 billion DeFi ecosystem are covered by a policy that will help replace them after a hack or code error. That was also true last June after the aftermath of Terra Luna's algorithmic stablecoin UST. If you didn't know about that, Terra USD losing its peg and wiping out $40 billion in the process. That was the crazy crash that we saw, and obviously that brought down everything and started falling for crypto. For the rest of the year and arguably even now, the effects of that black swan event worked their way through the industry, taking down other companies. In its wake, tens of millions of dollars worth of DeFi insurance claims were filed as users tried to recoup their losses. Roughly 68% of the claims filed since June have been paid. Now that the company selling DeFi cover, the preferred terms in the industry for this type of insurance have survived their baptism by fire. They're optimistic about keeping the momentum going. DeFi cover is a catch-all term for insurance that covers blockchain-related activity. It uses the same basic principles as traditional insurance. Policyholders pay a premium and receive a payout if and when they file a claim for a covered event. Those events are where the products really depart from traditional insurance. Stablecoins losing their peg, crypto assets being stuck on a platform, hacks or code errors causing smart contract to behave erratically. So this is basically the version of insurance in decentralized finance, and the cases that it covers is stablecoin losing their peg, crypto assets being stuck on a platform, hacks or code errors causing smart contracts to behave erratically. So understanding this is really important. The use case of insurance in this space and DeFi is another good use case in the future. If you want to learn about it, it's a good time to do that because not many people are doing it. So you can see that DeFi cover is a thing, and this is going to be a big one because insurance is always a big industry, and in blockchain space it hasn't been touched yet. All the players that are doing it are either doing it at a smaller level, and they don't have that much expertise. So if you want to get into that space as well, it would be a good time to do that. So make sure that you do your research about it. There are different categories on CoinMarketCap and other places if you want to see about DeFi insurance as well. So you can have some read about it and get to know more about that kind of part of the cryptocurrency market. How quickly payouts happen can vary. For something like a stablecoin losing its peg, such as when a coin designed to hold a value of $1 suddenly drops below that mark, these tools can send payments to a policyholder as soon as it detects that stablecoin has dropped 5% or more below the value of its target. In other cases, like customer funds getting stuck on a company's platform, there's usually a 90-day waiting period before claims can be filed. For those, humans usually get involved to assess which ones are valid. So this is a really important one, which you can see that if you do a DeFi um, insurance and DeFi cover. The best thing about it is that it can get triggered as soon as you have a 5% drop. And this is the best thing about technology, that it can take down the time, which is usually a lot, and it can take that time down to literally few minutes and seconds, because how it interacts with that blockchain, and it quickly changes the premium and understand that you have bought this DeFi cover, and if the price goes down below that, they'll automatically pay you. So this is one of the best thing. I just got to know this now, so I'm pretty shocked by it that this can happen. And if you are a person who has done some insurance in your past, you would have seen that how long it takes to do the paperwork in those in that industry especially. So if you bring that time down, there is a lot of value for you to take out of this space. And obviously this is going to grow further from here. There will be more people coming in and trying to understand the space. So obviously when there is a issue bigger than that, where this percentage or something else, customers the funds get stuck, then there will be a 90-day waiting period. So as soon as humans are involved in this space, then you can see that the time frame become longer. It's 3 months. So think of that and think of how much value it will provide, because in current system, even these kind of the 5% drop, they won't do it automatically, because the current system doesn't have those kind of mechanism, algorithms, whatever you want to say. And then when AI comes in with this will happen in minutes, so minutes or seconds. So you won't have to lose so much time, so much paperwork, and so much value is lost in between that. So let's see how this turns out. I'm pretty excited for it now. I think I will do more coverage on this kind of content as well. So despite all the parallels, DeFi cover has to contend with the fact that insurance industry has been highly regulated in the US since the 1940s. So even though DeFi covers looks and act a lot like what most people would call insurance, the companies selling it, including all the ones Decrypt talked to, prefer the term DeFi cover. Since June, more than 17,000 cover have been sold according to OpenCover. The website was launched in December by Jeremiah Smith to aggregate data for the burgeoning DeFi cover industry across the Ethereum, Polygon, Arbitrum, Optimism, BNB, Smart Chain, and Avalanche networks. So you can see there is this website OpenCover, which is looking at the data from there, which is pretty good. Total value log 274 million last 90 days. Active cover amount 279 million. So that's good to see. And 7 covers sold 17,461. Claims 525. That was mainly in that FTX crash era. Pigala White Hack, Pando Rings, DFX. So it shows you that where the insurance spikes happened, and it's a very good data point if you want to see. There were 355 payouts straight away, and others must be pending by now. If you look at 30 days, you won't see much there. Obviously this was mainly from the time where FTX crash happened. So that's pretty good. Good to see this kind of data out there available freely for you to see. And